Welcome to today's edition of Frontier Opening Bell. I am Boston Omofaye here in Lagos. Let's get today's show started. It's Thursday, the 2nd of July. Let me introduce my panelists today. My guest analyst, Akibamidele Akintola, is the head of Sub-Saharan Africa Equity Sales at Stanbic IBTC Stockbrokers. Good morning, Akibamidele.
Good morning, Boston.
Great to have you. And from Vertical Capital, banking analyst, Joshua Odebisi. Good morning, welcome.
Good morning, Boston. Thanks for having me.
Very appreciate your time. And of course, one of our regular analysts on the show, FX trader and managing partner at UFX Nigeria, Uche Naminis. Good morning.
Good morning, Boston. Thank you.
Well, thank you, analysts. Let's just hit the ground running. Let's give a very quick review of where we finished up on some of the African equity markets on the first trading day of the new month, July. Nigerian bourse was about 0.5% in the grey, crawling its way back to 25,000, a psychological reading. The Ivorian market, the BRVM, softened 0.04%. The Egyptian market made a second gain of the last 5 sessions, 0.13%, after the government did a massive treasury bonds options. Equities investors are back in the play. Meantime, the Kenyan market was 0.04%, around a flat line, as President Kenyatta put a signature on the finance bill and, of course, sign off on the budget 2020. Meantime, South Africa's GSE was down 1.06%. Let's talk about the East African market. Of course, the big story from Kenya was the signing off on the new finance bill, which is heavy on revenue for East Africa's biggest economy. President Kenyatta did that yesterday, as well as the budget. Kenya reported its exports up 5.3% to 145 billion shillings in first quarter, and the country's largest media group, Nation Media, housing television, radio, newspapers, says it's cutting jobs. It's now moving some of its content online, doing what you call digitization, as we see more of COVID-19 impact. In Uganda, the first quarter annual GDP numbers shows 1.8% reading, similar to the figure we posted here in Nigeria in the first quarter of the year. And Zimbabwe Stock Exchange posted 3.2 million Zimbabwean dollars inflation adjusted profit for the full year 2019. Let me start this conversation with Akibamidele. Of course, part of the story that we saw in Kenya, of course, which is also the story from Ghana, has to do with mobile money transfer and the government saying we're extending the free waiver period for the Ghanaian MTN mobile money till the end of September. What's the underlying currents here? What do you like to bring out? Bamidele?
Well, I think it's important that we're in a COVID period, and I think it's important to obviously ensure social distancing. In order to achieve that, what you want is for people to do more digital payments, contactless payments where necessary, either with use of M-Pesa or Momo in Kenya or in Ghana, right? I mean, if you look at the amount of transactions that are less than $15 in Kenya, for instance, is about 75% of all digital payments. Okay, so it's necessary for, I think the view the government took was, you know what, we will do a waiver on the cost of doing any transfers lower than sort of $10 to allow for the man on the street be able to do more digital transactions as opposed to going to an ATM or using a POS or even having contacts with each other, either by cards or machine. If you look at the case of Kenya, the number of the revenue that is being made by the players is probably about 80 billion shillings annually. What we see is that with this waiver on this fee, the telcos will probably be losing about 5 billion shillings every quarter. So, all in all, we think that there's probably a material 6 to 10% impact on income. So that's probably material. When you go to Ghana, I think it's largely unclear yet how this will play out, but I imagine that the market structure is very similar. We're watching to see how that would evolve.
This is good positioning for MTN in Ghana as a big brand on the continent, and Safaricom as well, Two of them are the leading telco operators, mobile money operators on the continent. So this is good news for them. Hanging in there, Bamidele, let's give a bit more flesh to the Nigerian West African story. Bamidele just talked about the Ghana mobile money story. In Nigeria, the price modulation, or what you call the repricing model for the pump price of petrol, is a big story. But the Nigerian market keeps moving on. As we saw earlier, our Ocean Index opens a bit positive to start the new month. Meantime, Nova Merchant Bank, this unlisted commercial merchant bank, opens as a 10 billion naira bond issuance, which is a 7-year paper. I think you can call that paper in about 5 years from now. Bamidele will speak a little bit to this later on. Meantime, the Nigerian Stock Exchange announced a review and amendment of its pension index effective 1st of July. And of course, our PMI, according to FBN Quest independent data, shows 59%, 53.9 reading in June against 43.3 in the month of April. Meantime, the BRVM Aura Group, which is a big company which has included banking group in West Africa, says its consolidated net profit rises 18.3 billion CFA fund in the first quarter or in the year. So, but let's just take this away and let's just go to the banking sector story. Joshua Odebisi at Vertivo Capital. So, what do you make of Nova Merchant Bank doing a commercial paper?
Well, like I think I've mentioned before, I think obviously the current climate, the current yield environment is very favorable for banks or any other institutions to raise money in the fixed income markets because yields are, pretty low. I think we have the 1-year papers trading at about 3.5% or even lower than that. So I think this is obviously a very good strategic move to raise cheap funds and to be able to manage your loan, your payments, your repayments going forward. I think it's a very smart move, and like I said, I think we're going to see a lot more of these kinds of transactions happening going forward because the equity space is not really doing very well, not just in Nigeria, but I think on the continent as a whole. So I think institutions are a bit wary of trying to go to investors and ask them to invest in equity shares. Rather than that, they will just prefer to just issue commercial papers at slightly more favorable rates than being offered by any of the governments, especially the Nigerian government at the moment, which they would jump on, and that would give them a lot of demand, and they'd be able to raise cheap funds that way.
Bamidele spoke about earlier on the issue of a free mobile money transfer by Safaricom, by MTN. Joshua, we haven't seen any Nigerian bank says, look, you can do free transaction during this period. COVID-19 period. So, Joshua, what's your take? Should it be done? Would that be good?
I mean, sure, of course, it would be great for us, the customers, but it would be, catastrophic for their bottom lines because that's a very important line item for all these banks.
Even if it is 1,000 naira, even if it's 1,000 naira.
Even if it's 1,000 naira, I mean, okay, sure, they could. I think it would be favorable for them to say, reduced transaction fees, like minimal, almost like the way some of the digital banks have, very, very minimal or even zero transaction fees in order to encourage people to take on, their services. I think these large banks know that they're not really in a position where they're searching for or trying to attract customers. They know that some people just have to transact online or through mobile money avenues. So they're not going to be too keen to give more incentive. Rather, they're going to give promotions. Like I know one particular bank is saying, if you buy credit on our platform a couple of times, we'll enter you into a raffle draw, that kind of thing, just to boost activity. But they're not going to waive those fees, even on that promotion, just because that's part of what makes up a significant part of their non-interest income.
It's interesting. I'm going to ask Uchenna Menis at BlueFX for what's making the headlines. A few of these stories. So there's a non-farm payroll in the US. Jobs data will be out of Europe. We also have a couple of interesting developments. Eurasia Group is warning that the U.S.-China relations is heading into a very dangerous situation. That's on CNBC early today. Meantime, oil prices are now at an elevated level of about 42 for the Brent, 40 for the U.S. dollar, for the U.S. oil. And folks are head scratching. What does it mean for Nigeria that has just moved to deregulate our pump prices? Let's start from there. Uche.
Right, Boson, just to summarize everything, right now, I have no idea what's going on in the market. I have nothing really makes sense. It's looking so very unusual and very uncharted. Let me put it in plain terms, because to put in perspective, what happened yesterday was the U.S. Congress sort of signed out a bill against Chinese national security law in Hong Kong, and going into this morning, we're seeing the Chinese stock market surging significantly. And right now, they have seen an inflow of about 17.1 billion yuan that has not been seen since the last 5-6 months. That is trying to tell you that something is really, really going on underneath that has really messed up price discovery. We have no idea what exactly how fundamentals even matter to the market anymore. And that in itself is sort of highlighting that we are in an unprecedented level of a bubble formation, right? And this, if we go back in history, we understand that these things don't end well. Now, the China-US relationship is something that has turned so sour, and right now everybody is trying to show their strong footing. The Chinese has also highlighted that the US is making a lot of intervention in Hong Kong, and that itself is affecting its sovereignty. When you look at all of this political risk, and look at the issue with COVID-19, yesterday the US saw a surge of 50,000 cases. That has been the highest surge since the curve was supposedly flattened. And when you look at all this risks sort of materializing underneath, and the market is just acting that there is nothing going on, then it's something for investors to really walk back and understand that, well, this is not looking like it will be sustainable. So for me and the country, Nigeria, I think I'm really want to assume that the government and the central bank, should I say policies, should sort of really focus on how we can be sort of looking for how to generate revenue outside oil sales, and also trying to stimulate the economy in other avenues, really, because I don't think this is really going to end well.
Very messy situation right now. So, Akin Bamidele, what do you make of this? We decided to move to deregulate the market. We thought oil prices would remain very low. Here, oil prices decided to start going up. Some soft demand is there. Supply, Russia is trying to keep its own side of the agreement for the second month running in terms of output. Here we are. Are we caught in a kind of a booby trap here?
I think, today is quite an important day. Today in Nigeria, we're revising the price per liter at the pump to 140. Right. If you recall, a couple of months ago, we celebrated a key reform, which is that subsidy is gone, and subsidy is gone forever, hopefully. And we saw the price adjust. Right. We saw prices go as low as 120-23 naira per liter. For the man on the street.
Yes.
So, and obviously that was a low price oil environment. Now, obviously, the question was everyone's mind is what happens when the oil price recovers. And now oil price has recovered to 42. There's now been that adjustment, which is that the floor price goes to 140. And the question is, does the government capitulate or do they hold their grounds? And that's something that this is a litmus test. It's an important, day in history. And we'll really see how this plays out over the next couple of weeks and months and how the oil price evolves. But if you look at, obviously, Nigeria, we try to, incorporate or instill the removal of more subsidies in the power sector, right? There was massive pushback, in the press over the last few days, and where the Senate even said such things should not happen, and the president ended up suspending the hiking electricity prices. So we're a bit on the fence, which to say, do we think the government will hold ground and let this key reform stay? The truth is, we're spending about almost $1 billion or $2 billion a year on subsidy in a country where we're not spending even $1 billion on education, right? So it's important that subsidy has to go. This is a year where the government's revenue is significantly constrained, even in terms of obviously trying to borrow debt. We're borrowing at significant levels. As at first quarter, debt to revenue is at 99% literally. So there is a lot of pressure on government revenues. This is not the year for any more subsidy. So which is why I think we will keep watching that space and just to see how things transpire locally.
Okay.
Yeah.
Well, great. So I'm just going to ask. These are some of the macro economic environment issues we have on our hands, Joshua. So how do you think this will play out on the equity side with the pump price adjustment, the pushback in terms of electricity tariffs, the whole talk about the need for us to get more revenue, but the IMF says we shouldn't be too aggressive on the tax plan that we have and all of that. Where do you think investors will like to put this? What do you think the playbook will be on the equity side first, then on the fixed income side? Give us a minute of that. Squeeze it together.
Well, okay, so essentially, I think what we have to look at is the perception of the international investors first and foremost, because it is vital that they feel like our market is safe so that they can bring in funds and not continuously exit the market and put pressure on our foreign exchange reserves. But like Dele mentioned, I think it's very important that we are seen to hold our nerve, especially when it comes to this adjustment of pump price. So going forward, it would show some sort of stability if, as the oil price changes or even increases, we continuously increase the pump price of petrol and, there's no real pushback or hesitation on that front. Now, this would, create a sense of safety or a sense of normalcy within the market, which would, in theory, encourage investors to come back into our markets. Because I think, obviously, the economic outlook has not changed. We're still in a little bit of on shaky ground. So I think what investors would be looking at, more importantly, is whether or not they see a long-term stability in our market from the government in terms of policy. Obviously, the federal government is trying to increase revenues and boost economic activity, but international investors are more geared towards how is the market going to, how are my risks going to be mitigated, So they have to understand whether or not there's going to be, a change, let's say, because, the IMF and the World Bank are really pushing for us to consolidate our exchange rates together. That's another very big, factor that's going to encourage or discourage international investors from coming into our market, whether equity or fixed income. And I think that's really where international players are at the moment in terms of perception, just looking at where the market is, what the federal government is doing to stabilize, and whether they're going to allow the free market to move on price and on things like FX.
Okay, great. We'll get back to this conversation around Nigeria before we round off. Let's see. But let's squeeze in the Southern African market. The rand was down this morning on the dollar, on the pound, on the yen, and on the euro currency as well. So the numbers are looking a little bit mixed for the Africa's most advanced economy. The manufacturing PMI reading 53.9% in June, private sector credit up 6.35% in May. On the corporate side, Tongaat gets GSE's public censure and fined 7.5 million rands for non-compliance. In a smaller country in Southern Africa, Eswatini's government and MTN, they are partnering to launch an e-payment portal for companies' registration. And of course, in Zambia, Pamdozi, which is listed on the Lusaka Stock Exchange, posted 4.4 million kwacha for loss for the year ended March 2020. So let me just ask you, Uchenna, what do you make of where South Africa is now? The road to this economy is traveling with the latest GDP numbers contracting for the third consecutive month. Where do you see the market play here, and the importance of the currency, the rand, still holding on to 17, has not been able to break that over the last few sessions.
Both, I think you would try and cross-check the exchange rate with those G10 currencies. Basically, I think the rand actually strengthened against them. If you can recheck on the data, the rand is highly linked to global market risk on sentiment, and as we're seeing now in the near term, this heightened level of risk on sentiment, and that is also translating to the rand. Oil prices, the commodity market, we're seeing silver sort of breakout. We're also seeing gold testing the $1,800 psychological level. That in itself is giving investors that bullish appetite to play in the space, the SA market. And I believe as we continue to see such sentiment bolster and kind of trickle into the environment, I think that is also going to be significant in the South African market. As you have said, they are like our poster boy for the African continent, and they are highly correlated to the general global market sentiment. And every single time we see that level of risk on sentiment, we see it translate into the market, the South African market.
Thank you so much, Uchenna. I checked that through there this morning, 1704. That's on the dollar, 19.1 on the euro, 21.27 on the pound, and I think about 2.41 positive on the Chinese yen. Thank you very much for correcting that. Thank you so much. We appreciate that. Keeping a very eagle eye on where the currency moves, of course. So let's talk about the North African market very quickly within the time left on the show this morning. The Egyptian market closed for yesterday and today, so the market will be reopening. Of course, Friday is off the radar, so you expect the Egyptian Stock Exchange to be back on Sunday to be the first trading day in the month for the market. In the meantime, the Moroccan market, the free float index closed 0.42% positive. On Wednesday, Casablanca ESG 10 was up by a bit of a higher margin, 0.55%. Meantime, the Moroccan economy grows 0.1% in Q1. That's the weakest since the year 2006. In neighboring Tunisia, the stock index, down about 1%. The Tunisian index, top 20, deeper negative territory, 1.15%. So, gentlemen, let's wrap up the show for about a minute or so each here. Akinwumi, in terms of the Nigerian markets and the Pan-African view, where do you think the big story really is as we start in the second half of the year for Sub-Saharan Africa?
I think my outlook is a tough one. I think what's important is we've just closed the second quarter. If you look at the trends of the results that were released, that are available, first quarter was still relatively strong, right? I think it's important that by the third week of July going into August, right, the reporting season will be upon us, right? I think what's important for a lot of investors is to see the impact of COVID in a fully packed quarter, right? Because the COVID lockdown started towards March. So you haven't really seen the impact of those on numbers. I mean, yesterday you had a profit warning from Guinness already. I'm not sure, I don't know if you'll be expecting more, but it's going to be a very interesting quarter going into July to see how a lot of companies are navigating. I think when those results come out, is investors will be able to choose who they believe is a resilient play within this environment, who are the winners, who are the losers. However, I think just from a macro backdrop, I think the sentiment for Nigeria is incredibly weak. We had a conference last week where we hosted about 45 corporates across Africa, 400 clients across the world, 2,700 meetings over 5 days. And for Nigeria specifically, the concern is really around FX. It showed up in every meeting. There was massive concerns on CRR, right? The elevated level of CRR and how banks will make earnings this year. Huge concerns on inflation, loan growth. The theme was very clear, right? I don't think anyone was trying to be a hero and to think that the market will be bullish, and everyone's looking for how to navigate and at least try not to lose money. I think the same sentiment will apply to most regions across Africa. And also if you look at the MSCI now announcements, and MSCI looking to downgrade Nigeria to potentially a standalone, so that will also have impact on capital inflow. Even in terms of FDI, we have been at a historical low, actually lower than Ghana. If you think that Ghana is a 20 million population country, that is just the size of Lagos, and they get more FDI than we do. So the outlook is bleak. I think the macro outlook is one that concerns me. I really don't see the trigger for a significant rally in the market, so I think the market will continue to wobble at the level that it's currently at the moment.
Thank you, Akinbamidele. Joshua, where is your play in the marketplace? Is it on the equity side or the treasury bills, fixed income? We saw yesterday's auction by the central bank. Our stop rates continue to be at a little above 1%. Folks are asking, are we going to hit the zero level anytime soon? Negative yield, where is inflation heading towards 13%?
Well, I mean, that would be pretty disastrous for investors and traders in that market if that were to happen, because we're not a fully developed economy. We really shouldn't even be playing at such low single-digit levels of interest rates. But in the equity space, like Akinbamidele mentioned, there's very little to show any sign of encouragement. I think what investors can do is continue to play very smartly, and I think it's mostly local investors doing this. Waiting for the market to dip a little bit and then coming in on some strategic names and then waiting for them to pick up by a few, maybe 10%, and then exiting those positions. Just trading really on very small levels, and that's the best we can hope for in the near term, because sentiment is too poor. International players are not going to come in and boost the market the way we require them to, unfortunately, and the local guys are just not strong or powerful enough to really lift the market significantly going forward. So I think it's a mix of both. If you can play in the treasury space and play with your fixed income securities, then go ahead and do that. But the problem is obviously yields are going to continue to moderate, but hopefully they won't reach zero or negative levels. But anything is possible in 2020.
Before I forget, Bamidele, quick one. What's your take on Nova Merchant Bank on 10 billion bond sales?
Well, I think it's a 10 billion out of a 50 billion program. It's 7-year, 5-year callable, and the intention is really to fund the medium to long term strategy of the bank, to help grow the risk assets. Like I said, there's a lot of liquidity in the market, so everyone is trying to take advantage of that liquidity. And you can see from the T-bill auction yesterday, the level of our subscription. So yeah, it's really to drive, to support their long-term growth. And they've come to the market at a rate that is closer to inflation at least. I'm not sure. And I think it's tracking ahead of any fixed income instrument that is on offer today. But yeah, I think it's the first of its kind from them. It's a name that players will still like to warm up to. But yeah, it's a play to take advantage of the market and the width and just the liquidity out there.
Interesting. So let's wrap it up with Uche Namenis. The market is in a kind of conundrum. So should we throw away the compass, as it were? Should we just throw it in the water and just continue to try to use the rule of the thumb, whatever it is, to try to navigate the horizon that's very unclear? What should we do?
One thing is clear: V-shaped recovery is a political statement and has no fundamental basis to it. Right? You need to sort of artificially incite sentiment or optimism sentiment in people's mind. And I think that has been the case. The fact that the Eurozone number just came out now and May actually saw an increase in unemployment numbers. And that in itself is telling you that whatever it is analysts or political figures are putting out there saying things are going back to status quo, it's almost impossible for that to be the case. So as Joshua has mentioned, it has to be where investors are sort of just taking that cautious stance, going into the market on a short-term basis. there's no long-term outlook here right now. We're not exactly sure what's going to happen in the next 2 or 3 days, 1 week, or 1 month. You just need to manage risk effectively, basically.
One day at a time, one day at a time. Maybe we're getting down to one trade at a time. We're not sure, but okay, let's just see how it all goes. One trade at a time, however it goes. Thank you so much, Akin Bamidele Akintola, the head of SSA Equity Sales at Stanbic IBTC Stockbrokers. Thank you very much for being on the program today. Joshua Odebisi, thank you so much from Ventura Capital, banking analyst, and of course, Uchenna Minis, the managing partner at UFX Nigeria. Thank you so much. I'll see you next time here on Frontier Opening Bell. I am Boosting Namafai. Thank you. You can watch this show on our website. Follow us on Twitter at Frontier AFR, and of course, follow our guest analysts as well on their Twitter handles. I'll post these shows to everyone. Thank you, and I'll see you next time.